Well, Elon does not believe in UFOs, despite the millions of times that people ask him. And we wanted to believe in Tesla Energy UPOs, and we were wrong. And we want to tell you what we thought then and what we believe now, and take you through that real quick. Matt, where were we before in the previous video with UPOs?
Yeah, sure. And so I want to emphasize that what we were doing at the time was open sourcing our research. We had this, I think this was the day after the Tesla earnings release that we put this analysis out there. But essentially, what we noticed was there was a huge amount of growth in a metric that's disclosed in the details, essentially like the footnotes of the 10Q, called unsatisfied performance obligations. Larry had done a huge amount of digging on this and consulted with some CPAs and essentially presented the case that this was high margin revenue related to the essentially performing the performance obligations of like testing the actual mega packs to prove that they actually were meeting the performance specifications that they required. If this reading was right, then essentially the cost of goods sold associated with the hardware was recognized as the revenue was recognized for that. But this piece of it, which has a $5 billion balance, $5.7 billion balance, I think at the end of June 30th, we thought there was a reasonable chance that this could be 90% gross margin or even higher revenue, which Tesla would recognize in the future because there's no associated cost with it. So this was our kind of thesis. And we said at the time that we're not 100% sure on this. We were doing this analysis the day after. And I think one of the questions that we asked at the end was, okay, what would it take for us to actually change our mind on this? And so the thing that we said at the time was if Tesla Energy gross margins don't increase significantly, and I think Larry said the next 2 or 3 quarters, then we're probably wrong on this. I think because where we were at this 90% gross margin potential versus where Tesla Energy historical gross margins have been, the delta between that was just so large. Larry suggested, why don't we actually just reach out to Tesla IR and see if we're barking up the wrong tree on this. So that's what we did. And Larry, why don't we share what we found, what the feedback was?
I reached out to Tesla IR, who got back to me, and they confirmed that the UPO is nothing but unfulfilled contracts that have a length of more than a year or more, and that it's like a backlog of orders is basically what it is, which, by the way, confirms what James Catt said to me, because James Catt came back to me and said, no, you're wrong. This is what it is. I said, we better check. We had already made the decision to check. We'd been consulting a few people, but I decided let's just go to Tesla IR. We decided let's just go to Tesla IR, which we did, and they confirmed what you just said.
Yeah, so when a company signs for a mega pack, they don't get it immediately. It takes some time. It may be some kind of combination between getting that final grid connect or getting the final connection done and getting the transformers. So there's some kind of lag that happens by the time that contract gets signed and Tesla delivers the mega pack to the customer. So what these unsatisfied performance obligations are is that they're indicating that the size of that pipeline, that those back orders that have really been, that are contractual, it's already been signed. Now, that doesn't mean there's not more business that's being talked about that happens before that, where they're in preliminary stages with Tesla. Matt, what was the result of all this? And
one other item that you didn't include in that is that there could be a backlog of orders for delivery in the next 12 months, but that's not in this disclosure. So this is specifically just orders that are 1 year or more.
Or they at least start out that way. Yeah. All right.
I think the contract length of 1 year or more is the key language.
Yeah. So if I sign up for a mega pack today and it's going to be delivered in 6 months, then that's not in this backlog.
Right. Yep.
Yeah.
All right.
As long as there's no ongoing service associated with that too. So that's one thing we haven't exactly spoken about in detail, but I would imagine that most of the orders have a service component or a maintenance component. And so for that reason, I think most of the orders that Tesla actually has that are contractual will fall into this bucket and get scooped up by the UPO. But if there's a hardware only where Tesla doesn't have performance guarantees, doesn't have ongoing maintenance with that same contract, then yes, that would definitely not be included in this UPO disclosure.
Yeah, so we are going to seek to clarify more items with Tesla IR, and we're very thankful for Travis getting back to us. Matt, what were some of the financial implications and the differences between what we were thinking and where we have it now?
Yeah, so I actually charted the difference. And so we can go to a share screen here. And essentially what I have here in the orange is the original estimate that we had of Tesla Energy's gross profit. So you can see we had this increasing pretty significantly, getting to $1.5 billion by Q4 of next year, and then all the way to around $2.5 billion per quarter by the end of 2027. And the reason for this is primarily due to the fact that we were assuming it was higher margin. So I think our blended kind of overall Tesla Energy gross margin got to around the 40-41% range at the peak. And so when we back out that high margin component of this assumption, without changing too much of the other parameters of the model, we're getting to, I think, much more muted, but frankly realistic assumptions around gross margins. Instead of getting to 1.5 billion in energy gross margin by Q4 of next year, instead we're getting that to that point 2 years later, and it's really just on scaling of deployments rather than some huge increase in gross margin percentage. And then I think what is most impactful to the bottom line, because it is the bottom line, is our estimate of the EPS impact. So one of the things that we highlighted was that our estimate assumed that Tesla would get to over $1 of energy earnings per share by next year. By having this lower estimate, it's more like mid 60 cents range in Tesla energy contribution. And I think that still is higher than a lot of people are estimating, just based on how quickly Tesla Energy is scaling deployments and ramping. I think a lot of people are just continuing to still ignore it. This is still a very good story, but it's maybe not as exciting as we were initially painting it out to be. So you are getting to the over 30 cent per quarter range by 2027, kind of dollar per share range by probably straddling 2027, 2028 with the assumptions that we have here. And of course, we'll be wrong on these, but given the magnitude of the correction, we just wanted to put out this video to correct that, put a little sad face out there. We wish our original interpretation was right, but we don't ever want to be kind of Tesla hypers. We want to be realistic. We want to be doing original research. And unfortunately, in this case, our read of the tea leaves, as it were, was not right.
Right. So has anybody got a sword here? I mean, we need
3 swords to fall on.
3 swords to fall on. Yeah.
Are you a Teslanaire eager to further grow your shares? At Rebellionaire.com, Bradford Ferguson and Matt Smith have demonstrated their aptitude, consistently delivering groundbreaking, world-first research featured on platforms like Tesla Daily, Daily on Investing, Solving the Money Problem, Limiting Factor, and Farzad Majbahi. At Rebellionaire.com, we go beyond just holding shares. We strategically trim and add, capitalizing on the stock market's emotional fluctuations. Our approach involves selecting additional exponential growers which we believe are undervalued by Wall Street. We use covered calls to create cash flow from stocks, even those without dividends. Our financial planners craft a personalized master plan using a first principles approach addressing all aspects of your finances, not just your investments. Our goal is to consistently increase your share count, avoiding missed opportunities during market FOMO or panic selling, and minimizing tax liabilities. If you're ready to enhance your share growth with our help, visit Rebellionaire.com.
Thanks, Matt. Great work. Really appreciate it.
And thanks to Larry. I know we were hoping this would be a little bit more exciting, but I think that this UPO disclosure, though it's not as sexy or exciting as we were thinking it would be, I think it still is something that's worth keeping an eye on, because it gives you, I think, a pretty good indication of where energy revenues are going to be in the short term. The fact that we still do have, it's around $2.5 billion of the current portion, which means it's going to be recognized in the near term. That alone is worth making sure that you've got at least that amount plus some normal amount of scaling in your models.
The surprising thing about it is how dramatically it's grown from quarter to quarter. I wouldn't have expected that. I wouldn't have expected it to be so dramatic. And maybe it's when Tesla opened the order book for the mega pack that started to climb up. Whatever the reason, but it's been quite dramatic. And it's surprising to me that 2 quarters ago it was almost zero. Now it's at 5 billion. I mean, it's amazing.
I have one guess. Lathrop has been scaling. They transitioned from the Megapack 2XL or to the Megapack 2XL in Lathrop from the Megapack 2 in Giga Nevada. But the prices of the batteries has come way down. And with that big drop in the prices of batteries, that makes the Megapacks just much more affordable for the utilities. It makes the economics work even more.
Right.
What do you think of that as an accelerant, Larry?
It is clearly, I think you're clearly right. But I was surprised that they would have built Lathrop without having in hand a very significant order book. And so, that's really my thinking behind it. But we'll see. Matt is absolutely correct. It's going to give us a very good window into how the order book is moving along. And the other side of it is could be that the very large percentage of their revenue is in Megapacks that are delivered within a couple of months of the order. So we'll see. This disclosure gives us that nice window. It'll be good to track in upcoming quarters.
And where I think our projection may be overly conservative is we're just looking at Lathrop and Shanghai.
Right.
And we're only assuming Shanghai is going to be double the output of Lathrop, whereas Elon might have hinted that Shanghai might be 3 times as much. And we're not adding other megapackeries into the projection.
Right. And I think we're being very conservative about the scaling up of Shanghai as well. So I think we've got a fair base to move forward from.
Matt, any final thoughts?
Yeah, and just to reiterate that we do wish we'd got this a little bit better. Maybe one other thought we haven't touched on yet is also just mentioning Powerwall is included in these deployment numbers. There was a video Tesla Energy put out recently talking about like a 10 gigawatt hour per year run rate. I don't think they're actually anywhere near that, but I do think Powerwall 3 is going to start becoming a little bit more impactful, and that's going to be at a higher ASP than we've modeled here too. So if that goes from 1 to 5 gigawatt hours, let's say annually to potentially even more, that could be really impactful. And those who've been following my commentary on Tesla Energy for a long time know that I'm extremely bullish on what's called distributed energy resources, of which Powerwall is one. I think as utility rates continue to go up, it's going to be a lot more economical for customers to be putting some storage behind the meter. So it wouldn't surprise me. Right now, the story is completely Megapacks. I don't want to really oversell Powerwall in the short term, but it wouldn't surprise me in the long term if Powerwall becomes a very meaningful contributor to this growth as well.
And I think we may see an additional factory in Europe within the next year. I'd be shocked if we don't see Megapack factory rising in Berlin in the coming year.
That'd make a lot of sense. And let me throw out an extremely bullish note. Something that's interesting is Elon talked in the shareholders meeting about the idea of Megapacks being able to pull directly from or connect directly to the high voltage power line and not needing a transformer. When Matt and I were discussing the adjustments we need to make and trying to understand all this morning, we were talking about how there's still a huge back order for transformers. There's still a lack of supply. And if Elon could solve that problem with the Megapack, that'd be truly revolutionary, you said, Matt.
Yeah, I still don't know exactly what that would look like. I have to give that some more thought because like you can't, just from the physics of how electricity works, like you need to be able to step up and down the voltage. Like typically you have one, what's called interconnect point, or sometimes it's called point of sale, where there's one meter that essentially differentiates a power plant from the grid. And so I don't know how that would work if you're actually connecting a bunch of different lines to different megapacks. Like that, to me, the actual physics of how that would work get a little bit confusing, but it doesn't, I wouldn't rule it out that in the next 5 years or so, Tesla's got some different way where they can either string together a bunch of megapacks and maybe there's some piece of equipment at the point of interconnect that, you know, could step these up in a more efficient way. To me, it seems like you'd still need a transformer of some sort there. But yeah, if there's any technical energy experts that can piece this together, I'd be curious to hear your thoughts, because it sounds really nice, but I've got some questions. But it's similar to what they've done on the Powerwall front, to be honest with you, where they built in the inverters right into the Powerwall. And talking to or listening to podcasts of actual residential solar installers, this is legitimately a game changer. And these aren't Tesla energy nerds like us pushing a bull narrative. These are just people who are saying, like, this is going to save us so much more time. It's going to be so much more efficient. It's a sleeker package for the customer. You've got fewer points of failure. So I think a lot of even Tesla bulls don't realize what a technical innovation Powerwall 3 really was. And I'm sure they're thinking about how can they do that on a large utility scale as well. But I'm not smart enough of an engineer to really picture what that might look like.
So it'd be an inverter.
Well, like a massive inverter, giga inverter.
Yeah, it need to be like super high quality and all
it's more than just an inverter, though, because you're stepping up the voltage.
You're going to step down the voltage. So without winding copper, it's, I don't know.
You have to wind copper. Like, you can't get around that.
Yeah, we need to get in a nerd here that can tell us what's possible. I'm trying to think of some solid state device that can do that. And those voltages are, what is the high tension voltage in the US? Is it like 1200 volts or?
So it depends. It's like 138 volts is a lot of lines. I think there are some that are like 256. Some are 512. Yeah. Yeah. Like the super high voltage lines right now, I think are 512 kilovolts or 1,000 volts. But I think most are more in the 256, 138
really hard
kind of
to
range.
do without winding copper. But
that's just physical property. Like there has to be some amount of like copper coils, and it's like just simple math on how that works.
Maybe Elon can ask his alien friends for us. All right, we'll end it there. Bye for now.
Bye.